Ladies and gentlemen, good day and welcome to the Power Mech Project Limited Q4 FY23 earnings conference call hosted by Nirmal Bang Institutional Equities. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touch-tone phone. Please note this conference call is being recorded. I now hand the conference over to Mr. Prashil Gandhi from Nirmal Bang Institutional Equities. Thank you, and over to you, sir.
Thanks, Vikram, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes you all to 4Q FY23 earnings conference call for Power Mech Projects. From the management team, we have S.K. Ramaya sir, Director Business Development, and Mr. Jimmy Satish, CFO. I now hand over the management for the opening remarks, post which we can take questions from the participants. Thank you, and over to you, sir.
Yeah, thanks, Prashil. Is it audible?
Yes, you are, sir. Please go ahead.
Yeah. Thank you. Dear friends, good afternoon. This is Satish. Also with me, Mr. S.K. Ramaya, Director Business Development. Once again, welcome you all to the earnings call, quarter 4 and 12 months FY22-23. We are happy to share various developments of Power Mech during the recent period. Overall, the performance of Power Mech is well within set plan and is in line with our internal target. Performance for the company continues to be robust and healthy. Let me first start with quarterly and yearly performance with numbers. The reported total income for quarter 4 FY23 is around rupees 783 crore. This is once again all-time performance in the history of 24 years journey of Power Mech in a single quarter. And the reported EBITDA is close to 140 crore, and the reported PAT for 4 is around 75 crore. During quarter 4 of last financial year, the total income was 905 crore and EBITDA was 997 crore and PAT was around 48 crore. The total income has gone by almost like 32%, whereas EBITDA has gone by almost like 43% and PAT has shown a growth of almost like 58%, which is quite robust. The revenue mix for quarter 4 FY23 is as follows. Erection business has contributed 148 crore, whereas last year it was 521 crore. Civil business, including railway, water and distribution, specialized construction, power-related civil work, it has contributed close to 760 crore, whereas last year it was almost like 516 crore. Operation and maintenance has contributed 247 crore, and last year it was around 217 crore. Electrical business, it has contributed close to 18 crore, and last year it was 17 crore. The domestic business has contributed close to 1,070 crore, which is close to 91%, and the rest has come from the international business, which is close to 9%. Whereas during quarter 4 of last year, the domestic business has contributed close to 85%, and international business has contributed almost like 16%. Similarly, the power sector, including operation and maintenance, power-related work, during quarter 4 it has contributed 43%, and non-power is almost like 57%. Similarly, during last quarter, last year, it was almost like 56% and 44%. Similarly, the total reported income for 12 months, the entire year, FY23, is close to 3,618 crores, whereas last year it was almost like 2,728 crores. There's a growth of almost like 33%. And the EBITDA for this year is close to 421 crores, whereas last year it was 303 crores. There's a growth of almost like 39% with increase in the margin. And PAT for this year is close to 209 crores, whereas it was almost like 139 crores during last year. There's a healthy growth of almost like 50% plus. And in terms of revenue mix, election business has contributed almost 606 crores, whereas last year it was 521 crores. There's a growth of 16% in election business on a 12-month basis. Civil business has contributed almost like 1,995 crores, whereas last year it was 290 crores. There's a growth of 55%. And O&M business has contributed close to 930 crores, whereas last year it was 804 crores. There is a growth of almost 16%. And electrical business has contributed 69 crores, whereas last year it was 93 crores. There is a fall of almost like 24 crores, which is 25%. And on a 12-month basis, domestic business has contributed almost like 88%, and international business has contributed 12%, whereas last year domestic business contributed close to 84% and international again 16%. And the revenue mix between power and non-power on a 12-month basis, power has contributed close to 54% and non-power 46%, whereas last year the mix was power 62% and rest has come from non-power, which is almost like 38%. The growth in business is significant. The above growth is on account of strong order book base, increased in-house execution bandwidth. Improvement is also seen in overall margin profile, and the same is further expected to improve gradually. Depreciation cost as a percentage to revenue remained lower side due to planned capex spending, and finance cost again as a percentage to the revenue remained lower side and continue to be controlled on account of improved working capital cycle and cash flow management. With better deployment of capital and improvement in margins, we have also seen improvement in return on capital employed and return on equity, which is quite healthy, and we see this improving going forward too. The overall execution bandwidth is still increasing quarter on quarter on account of various initiatives and strong increase in in-house resources. Company is well set to execute projects now in the range of rupees 900 crores to 1500 crores per quarter. Other recent developments and updates include, for the project executed and completed at Andhra Pradesh Medical Tech Park, we have received during last week the entire amount of 42 crores plus from AP government. This was held with AP government for a long time in spite of weeks being completing the project on a record time. The realization is a major development for Power Mech and will help in a big way to improve the cash flow and also the overall liquidity for our growth. Also, the retention money of around rupees 20 crores, which is due now, is expected to be realized next 30 to 40 days. All final legwork already been done, and we are quite confident of getting the 20 crores next 30 to 40 crores. With that, the amount of AMT get will be completely recovered. Generated positive operating cash flow during the year is around rupees 180 crores plus, and the free cash flow is around 120 crores plus, which is quite healthy. And we are also working on the same to improve further. The average monthly collection of the company is seen improving month-on-month basis with the growth in the business. Collection ranging per month. Now it's in the range of rupees 320 crores to 400 crores, which is significant. More importantly, the net current debt, excluding cash and cash equivalents, is substantially improved on account of improved working capital cycle, change in business mix, and change in customer concentration. The net current days have come down to 130 days as on 31st March 2023, and the same used to be 150 days as on 31st March 2022, and 205 days as on 31st March 2021. There is significant improvement in the overall working capital cycle. Now the gross debt and the net debt remain controlled despite growth in the business and order book. FY23, if we see, the gross debt is around 470 crores and the net debt is 241 crores, whereas it was 527 crores and 320 crores during FY22. The debt to equity as on 31st March 2023 is around 0.37 as against 0.51 as on 31st March 2022. Similarly, the net debt to equity has come down from 0.35 to 0.19 as on 31st March 2023, and there is reduction in debt equity ratio, which is quite healthy. The company continues taking various steps to strengthen its resources, including strengthening ERP IT-based leadership training programs, focus on safety and quality, strengthening supply management system because of increased business material component in our business model, and also the risk management. There has been continuous induction of the senior management from different experts from different industry to strengthen our execution capability, and also to strengthen the senior management level so that we can sustain our growth and cope up with the changes. Recently, we have inducted Mr. Surendra Babu Akala, and he has joined as head of India business. He has vast experience of more than 30 years in the field of development and augmentation of several coal and iron ore mine blocks in India. He was earlier associated with Western Coalfield, Central Coalfield, Southern Coalfield Limited in various positions, and also with Adani Enterprises Limited as a senior vice president in natural resources and mining business. Apart from that, Mr. Ratnadeep, who has joined as senior vice president, as business development and operations head, especially he is in charge of the business development and operations in Saudi and Bahrain. Following a meticulous academic phase in electrical engineering and global business management, as well as a vast experience of 18 years in international business development, strategy, business turnaround, and global operations. He gained solid knowledge in process optimization and strategic partnership building, growth, etc. Earlier, he was associated with reputed organizations like ABB, Siemens, Mech, Interconnect, etc. So each experience will help in a bigger way in developing the business operation, especially in the Saudi market. Along with him, Mr. Srinivas, who is the CEO of international market, he will be concentrating on Nigerian market, and Ratnadeep will continue to at the Saudi market. It will help in a big way to improve the international operation business. Now coming to the order book. The order backlog as on 31st March 2023 stands at rupees 23,000 crores plus. For the entire year of FY23 and 24, the current financial year, the company has set a target for achieving new orders of rupees almost like 10,000 crores. This is including the spillover orders of around 1,200 crores, plus the projects which are on L1 status close to 1,400 crores, and the projects already added during Q1 of the current financial year, including around 720 crores. And we're quite confident that this 10,000 crores numbers can be achieved. We have identified different projects, domestic, international, in different segments, close to 40,000 crores plus, and the conversion of 10,000 crores is quite achievable. We are also expecting good amount of order booking and execution cycle at international market too. Now the team has been strengthened because of COVID. There was a lag of 2 years, but now the momentum is picking up. We had a major breakthrough at Nigeria, Dangote in O&M, and there are multiple follow-up discussions are happening. So we are expecting close to 500 crores of order booking in international market too this year. The existence of strong in-house risk management policy, team to review each project progress, identify the associated risks, helping us to proactively mitigate at early stage for all the associated risks in various ongoing as well as the new projects. Various initiatives taken few years back, helping us now for a sustainable growth across all the verticals in a large way. Now the targeted business segments broadly include international operation, both the O&M and the traditional mechanical business. We are targeting close to 400 to 500 crores. Operation and maintenance, domestic, including the projects which are getting renewed during this year, we are expecting close to 1,000 crores plus. Power business, the traditional, because a lot of projects are coming up, especially the projects which are getting revived. Civil power and the FGD put together, we are targeting close to 2,200 crores. Of this, already the projects which are L1 includes close to 200 crores. On top of the railway, metro, we are working aggressively. The depot, ETC, we are expecting close to 200 crores. Material handling, we are targeting close to 500 crores. Water distribution works, we are targeting close to 2,600 crores, mostly Madhya Pradesh, Maharashtra. And specialized construction, around 450 crores, and electrical business, 450 to 500 crores. The company has built strong expertise in execution and business development. Now for the government, the opportunities are many to choose. Standalone pre-qualification to bid for any new projects for government increases significantly in projects like railway, road, water, IO, O&M, material handling, EPC and specialized construction. Execution for FY24, FY25 and FY26, next 3 years is going to be robust and healthy on account of improved order book, large targeted projects in pipeline, and increased execution run rate per month. Also, the margin profile we are seeing improving and expected to improve further gradually. We are working to build business model to have recurring long-term service model income to the tune of 3,000 crores plus, that is including operation and maintenance and the MD operation from FY26 onwards. In addition to the business growth, this will help in improving margins. This 3,000 crores pie is expected to improve at least 18% CAGR from FY26 onwards. So this will help in a big way. Moreover, to a large extent, it will also help improving overall working capital and cash flow. Now I request Mr. S.K. Ramaya to update on various other developments before we get into Q&A session. Thank you all.
Yeah, thanks Satish, and good afternoon to all our valued participants. Satish has given the overall numbers of the revenue, the order book, backlog of the order book position, and some of the numbers on the financial side. And what is important to understand is that actually I would like to emphasize that there is a first of all, the market fully for us. That is the first time we are seeing so much of penetration is there. And thanks to this national infrastructure pipeline, which is in under implementation for the last year. And this is visible in terms of the value of the orders what we have booked in the preceding year. Almost it is 100% more than the previous year what we have booked about 4,431 crores. And this the preceding year it is 8,479 crores, almost 100%. And this has been significantly possible. Some of the major orders what we have taken in FGD, infrastructure job, railway job, significantly railway and metro jobs, and then some of the maintenance jobs, and also on the traditional jobs on the power plant works, which has happened in Godda, Kurcha, etc. And BMRCL metro maintenance shop, what we are doing is a very interesting job, about 427 crores. For that opens the path for the entire metro availability of opportunities. About 27, about another 14, 15 cities are coming up. And this is the type of opportunity which has happened. And if you look at the overall figures, excluding the quarterly percent for the MDO development, the backlog of the order which was 8,855 crores as on last year, March 22, it has gone up to 13,733 crores, almost 55%. And the significant contribution has come up in the FGD business and the mechanical side. Almost 4 times the backlog has gone up from 1,650 crores to 6,879 crores. Civil work, there is a modest increase of 5,842 to 6,136 crores. And O&M, yes, last year there had been some of the opportunities got postponed, and there is a dip in the overall backlog. And electrical is more or less the same, but overall increase in the order backlog is 55%. And on the domestic IO, domestic continues to play a leading role because of the opportunities which are available in energy sector, infrastructure sector, railway, and various other non-power sectors. And that domestic sector almost contributes to the backlog of 97%. And international, as Satish has said, of the post-COVID, there had been a dull in the investments coming up in the Middle East, Gulf region, and now perhaps it will open up. Then the power sector business is significantly geared up at 66%, 9,131 crores is the backlog. Non-power sector is 4,602 crores. And this also is a good product which is there. Therefore, the overall, if you look at some of the major jobs what we are executing as on today, we are executing Udangudi job, which has done 1/3 of the job we have completed, that is in Tamil Nadu. Buxar, also 2 into 660 megawatt boilers for L&T in Bihar, about 32%. Bhusaval is under advanced stage of completion, 85% for 285 crores. And the bigger jobs, the 830 crores, we have done 70%. Maitri, Bangladesh, 855 crores, we have done 80%. And the very interesting thing what is happening in the for us is drinking water, 2927 crores as the original order value, it will significantly go up by 30-40%. That we have done almost 15% in the last year, and this year it will further improve. Then some of the road projects in Telangana and also in Karnataka and Mizoram, we have done about 40-45% of the work, and the Adani work we have already taken up. And then the BMRCL is an interesting job, the metro maintenance job, that we have already started the work immediately. And in terms of the manpower deployment, today we have a lot of optimization has gone, redeployment, and skill utilization of the skills available in different segments, infrastructure, installation, O&M, exports, all under contract management, business development. I think we have done a significant exercise on improving in optimizing the manpower. It has almost come down by 10% in spite of the order backlog and the turnover is going down. That is where it is also to some extent contributing for the better margins. At the end of last year, it was 32,000. Now it has come down to 28,500. Now, I would like to bring out certain things on the major segments of the work. Railway jobs, today we are doing 8 major jobs, about 13 to 1400 crores. And most of the jobs are faring pretty well, railway and metro jobs. And drinking water is happening in the UP for 3 areas, Bulandshahr, Etwa, and Pratapgarh, and Fatehpur. The order booking is expected, the original order which was awarded around 2,720 crores is expected to go up to 4,340 crores based on the project approvals of the individual villages and blocks. And therefore, about 2,903 villages will come ultimately. And the good thing is that we have provided 100% drinking water for about 102 villages. Therefore, that the company having diversified it and working in different villages, and we are having a distributed mechanism for managing the various villages with key managers posted in district-wise and area-wise. That is yielding results for us. And we have completed last year about nearly 571 crores of jobs. And these projects are well structured in terms of payment terms and other things without any retention, and there is an advance. And we are focusing a lot on this, and because there is so much focus on investment the government side also because of its need for the villages. Now coming to the what are the opportunities will come up down the line. I think a broad figure what Satish shared was 10,000 crores. It should be possible based on the track record and the market availability of the opportunities. And there are a couple of things which helps us to understand this. One is that there is a revival of some of the stalled projects, about 5,270 megawatts. Monet Spot, then Adarna Power, Meenakshi, Amarkantak 2 into 660, then Indbharat, etc. And already we are at the spot. We have taken jobs from the JSPL who have taken this job. Adarna, we are aggressively following with Vedanta Group for the 2 into 600 megawatt. And about 400 crores of offer has been given, and we are well placed to get to the entire job of that. That is the leftover job. And now Power Mech has developed expertise in undertaking finishing jobs, what we have demonstrated in Gonda, and also Monet Spot already we have mobilized there. So this is the revival of the project, and there is also a bit of information on the new green and brownfield projects expected, particularly NTPC is planning 14 sets, and overall about 28 sets are expected, 660 to 800 megawatt. We hope these things will take shape to balance the energy mix between power and renewable. And if that happens, another 21,000 megawatts of new greenfield and brownfield plants should come up. Already Talabira NLC project is there, 3 to 800 megawatts that have to take shape. And there are many projects from NTPC also in the pipeline. Therefore, this is an opportunity we are pursuing based on our expertise. And the recent diversification we have done in the mining side and the material handling and coal handling, we are executing quite well at Kurmita. That should give us a lot of expertise in handling a EPC job. And there are about 70 coal handling projects identified with Coal India itself. And Coal India is investing about 50,000 crores. And apart from that, there is a huge emphasis on the capacity expansion of the steel plants from present 140 plus million tons to go up to 250 million tons. And the immediate expansion, what is expected is on all these all the steel plants. For example, JSW, ArcelorMittal, Spot, and JSPL. They are planning to invest roughly about 3 lakh crores to ramp up the capacity to 60 million tons. The overall government target to enhance the steel capacity to 50 million tons by end of this decade, that is already there with an investment of $156 billion. Now the expertise what we have gained in implementing P4 projects in JSW Langul, JSW Dolvi, and then JSW Ballari, there are significant opportunities in this for the project work. They're mainly structural, mechanical, equipment, piping, and we will certainly take a call on this, and this is a good opportunity to pursue. In the case of drinking water, perhaps there is a significant progress, and out of 19.5 crores of households, the balance of the drinking water to be provided for 7.34 crore households, and government has allotted funds of 70,000 crores for this, and opportunities we are tracking in Maharashtra, in Madhya Pradesh, then Orissa, Karnataka, and we are looking for a couple of projects there, drinking water based on the experience what we have gained in that. Then the electrical side, the ongoing investments are continuing to be there in the DISCOMs. Only thing the competition is pretty stiff there, particularly DISCOMs investment and then transmission investment. 2 lakh crores and 2.5 lakh crores are coming up. And then most important thing is the railways. I think we have seen the current budget. Roads and railways have been given bulk of the budget out of 10 lakh crores. And we are doing pretty well in the both the sectors, railways and roads also. And we have now a significant organization set up to implement all these things. Now, as far as the O&M is concerned, some of the projects which were not taken up, we will take up in this year, both in the domestic market and international market. And domestic market, we are pursuing opportunities of more than 2,000 crores. And it should be possible, end of the year, we should be able to make around 1,000 crores. About 200 crores of renewables are there. And then we are already L1 in Raichur, about 170 crores. And also in Vedanta, we have taken some 44 jobs. So that should give us a reasonable visibility for the O&M, so the O&M backlog should improve it. And the other important thing is metro projects, for example, what we have taken up after metro and rail projects, 8 numbers which are under execution. The total government plan for the expansion of metro network from 700 plus kilometers, 750 kilometers, 710 kilometers to 27 stations. That should bring a lot of opportunities in terms of maintenance shops, which are these are our interest now because we have already taken up, and we will be looking at whether the main work also we can take up with some tie-ups that we are looking forward. And these are very good investments coming up with a good implementation plan and all. And with our expertise, what we gained in civil work in the last 10 years, perhaps it is doable also. Then balance FGD, around 60,000 megawatts are to be ordered. That we will be pursuing it. Then drinking water, I told you, railway and metro. Then roads are also there. Many roads are going on an aggressive basis. And about 4 or 5 projects we are looking at it in Telangana, Karnataka. And we'll see how to take it forward. Therefore, on an overall basis, we have identified about 40,000 crores of opportunities in the domestic market and also international market. Nigeria, we have got a big setup there with the O&M, and Nigeria is a growing country, 12,000 megawatts installed base. Then Ghana is there. Then Africa, things should open up in a big way. And the Middle East, what is their plan is that plus 400 gigawatts of power. Because of the COVID, there was a lull in the investment, both on the power sector as well as in the oil and gas sector. That should take shape now because their plan is original plan in the MENA region is to ramp up the capacity to 650 gigawatts. And we have got a strong presence we have got an office in Dubai, and we have worked in dozens of plants and completed about 6,100 megawatts of plants we have commissioned. And that experience and background should help us execute the new opportunity. So that is what I would like to say. Thanks for your time.
Yes, can we move to Q&A?
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking our question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press *1 now. Take our first question from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. My first question is, obviously you mentioned, last year our order inflow was 8,500 crore approx, of which only one order was almost 6,000 crore. So other than that, the order inflow was slightly lower. So what gives you confidence in terms of competitive intensity also is quite high. So what gives you confidence of almost 10,000 crore order win for the next year?
I think that comes obviously by the improved investment and the infrastructure, and also the private investment which is catching up now. Because earlier a lot of investments were in the government sector, now the private investment also is catching up. And if you really look at the investments that are coming in various sectors, whether it is infrastructure sector, roads and railways visibility is very clear. Then the energy sector also, some of the projects are getting reviewed in the thermal power plants, and new coal-based plants are also expected about 21,000 megawatts. Then on the industrial side, and then oil and gas sector, a lot of investments are being planned. And the other thing what I said about the drinking water, still a lot of opportunities is there, and then the FGD balance opportunities are there. Last year also we had a significant thing, but now the things didn't take shapes fully. We would have got more also. But now in this current year, the opportunities what is available, and with the experience gained, and qualification also gained, the 40,000 to 50,000 crores of opportunities is a good base for us to target this 10,000 crores.
See, more importantly, we set a target of close to 10,000 crores last year. Okay, so that taking various projects, including the FGD part. Okay, so we did close to 8,500 crores. Around 1,200 crores got spill over to this year. So we got 720 crores, and L1 status 1,400 crores. Maybe next few days we'll add that. So excluding the 1,500 crores, the additional is 8,500 crores. Of that, the orders like O&M, the projects which are going to be renewed, okay, that itself close to a larger number, close to 550, 600 crores. And international, they've kept because we didn't add much. This time they're targeting almost close to 500 crores. And apart from that, the large pie of FGD had to be awarded. So we are already in advanced stage of discussion to finalize. So on that, so plus the traditional power, civil, and the mechanical put together is close to 2,500 crores. That's adding up. And water, we didn't add much last year because our kitty was full. Now multiple opportunities are coming up, Maharashtra and MP, that itself they're targeting 2,500 crores plus, because 2021, almost 14 months back, we added close to 3,000 crores of water book. Okay, we wanted to first focus on the execution. So 2022 we didn't add much, seeing the backlog. Now the kitty was full. Now we intended to add, the execution cycle is going well. On an average monthly we're doing close to 100 to 150 crores run rate. So now there is an opportunity to add further. So we are trying to add 2,500 crores there itself. And material handling, it's a quite large pie. Okay, slightly we have kept a target of 500 to 700 crores. Taking all these things, so the numbers looks to be quite achievable.
Okay. The second question on the Jal Jeevan mission side. So we have an order from UP. I think recently in last 4-5 months, many orders were in the Madhya Pradesh as well. So are we bidding in the MP and any other states?
Yeah, we are aggressively focusing to the projects in Madhya Pradesh, and then UP also we are pursuing it because we already established a base, and perhaps Karnataka also. Karnataka about 50% Jal Jeevan mission projects have to be implemented there. There is a lot of backlog there, and a new government has come. Perhaps that will get the initiative, and Karnataka we have got a good base now, and because we are doing Bangalore and then we are doing work in Mysore and other places. Therefore, that should help us to, as Ganesh said, this is a focus area for us based on the experience what has been gained, and it is a good project to be implemented with strong investment because government is keen to invest the money in that. It has got benefits to the rural households. We are bullish on that.
And just last question on this Jal Jeevan Mission. So, how is the competitive intensity over there, and margins in these projects will be similar to what our company level margins are?
I think we are comfortable with 15 to 18% EBITDA margins, and the PAT will be around the reasonable PAT will be there.
The size is quite large actually. It gives opportunity to, of course, there is stress because the quantum is too large, and the rate at which it's working is quite good because if you see the PVC or the price escalation, not much, increase in prices. And it's a short-term contract, hardly 24 months. So we can easily work out 14 to 16% plus, But conservatively, it should at least beat our existing margins. That's what we're working on.
Okay, fine. That's it from me.
Thank you. We take the next question from the line of Deepak Poddar. Before we take the next question, participants, please press star 1 to ask a question. Mr. Poddar, please go and ask your question.
Hello.
Please go ahead, sir.
Yeah, thank you very much, sir, for the opportunity. Sir, I just missed the point you mentioned about the execution cycle. So what's the capability we have right now, and what's the rate, and what is the rate that we're doing right now?
Yes. See, now the execution, the bandwidth is well set in terms of the resources like manpower, the equipment base, the infrastructure, the manpower base in terms of skill and everything put together. Now it's almost like on average 900 to 1500 crores per quarter we can execute. Because if you see, we have demonstrated almost 1200 crores, almost close to 1200 crores in a single quarter. Now, ramping up to 1250 to 1500 crores is well set now. Gradually we have to see over a period of 24 months, once the MDO stabilizes, where to infuse and all, maybe after 2026, 27, we'll consolidate which are the areas to grow and where to restrict.
So 1200 to 1500 crores per quarter is our execution capability, right?
Capability is well set now.
And what's the rate we are doing right now? You mentioned something about that.
See, it's ranging between 900 to 1200 crores because quarter 4 itself we have demonstrated close to 1200 crores. Now, the resources in terms of the asset base and all, the range is 900 to 1500 crores per quarter we can execute.
Okay, understood. And in terms of revenue, I think earlier we were of the view of 5,500 crores kind of a revenue visibility this year, right? So that includes the FGD that order that got transferred from the execution got transferred from fourth quarter to first quarter, or it excludes that?
No, see, FY23 we are on track. We did what we planned. FY24, the order book is quite healthy. We should be able to convert 37% to 40% plus. So we see this quarterly progress improving each quarter. This is what we did quarter 23. So the order book is quite healthy. So there is high possibility and scope to improve quarter on quarter.
I mean, quarter on quarter, we should see improvement. That's what we are saying, right? Yeah, because I mean, 37% of 37 to 40% of order book we are looking to execute. So that excludes the MD order, right? Excluding the MD order.
MD order we are not including yet, right? Because FY24 maybe a small amount to 40 crores plus we should convert, and it should reflect in a bigger way from FY25, 26 onward.
FY25 is 40-50 crores, right? That.
No, 24. If all goes well, FY24 quarter 4 we're expecting close to 40 crores plus.
Okay, understood. Fair enough. I understood. And at 37 to 40% is in the range of maybe what 5 to 5,000 5,500. I mean, that may be the range one may be working at, right, for FY24. Hello?
Hello?
Yeah. So I missed your point.
No, yeah, you're right.
Yeah.
This is taking the backlog order book excluding the MDO.
So that's amount about 5,000 to 5,500 crores, right? I mean, in terms of 37 to 40.
The number comes that's the range because I can't be very specific, but there's a range what we should be able to achieve.
Understood. Fair enough. And in 2 years, I think we were targeting about 13% EBITDA margin, right? So, are we kind of targeting the same thing as we speak now?
See, in terms of margin profile, you would have seen like last 4 quarters, so there has been improvement in FY23. And FY24, of course, there will be some improvement on account of various regions like the project order mix where we had JV qualification board and the royalty we used to pay, that pie is coming down. Number one. Number two is like the new mix. The new orders, we are not targeting anything 12.5 to 13%. So this will also help in terms of improving the margin. Having said that, once this MDO stabilized, which we are expecting FY25-26, then you'll see that the margin contribution will be in a larger extent from MDO. So that will help to push the blended margins.
Fair enough.
So gradually we'll see the number improving.
I understood. So once the MDO operation stabilizes, what's the steady state margin we can see in MDO operation?
See, MDO, we are expecting anything in the range of 18% plus. So that definitely should help us to improve the blended margins.
Understood. Fair enough. I think, that's quite helpful, sir. That's it from my side. All the very best. Thank you so much.
Yeah,
thank you. We take the next question from the line of Pratiksha Datkare from Equitas Investments. Please go ahead.
Thanks for the opportunity. Just wanted to know what would be the top orders that will be executed during FY24?
Yeah, see the top orders will include, of course, the FGD, the water UP, then Yadadri in Telangana, Bhusawal, Maharashtra, then BMRCL, that's the Bangalore Metro, then Kajipet, that's again railway, Kurja, Udungudi. These are the top orders which will contribute substantial amount. Of course, Maitri, Bangladesh. Yeah.
Okay. And so how do we look at margin profile for FY24? Do we expect to see any improvement?
There will be small marginal improvement, yes. We are seeing the pie increasing, quarter on quarter, on account of various regions. Now we can expect some improvement in FY24 too.
Okay. And how about the working capital requirements? Since we are talking about execution of about 5,000 crores, how can we look at the working capital and short-term borrowing for FY24?
If you see FY23, in spite of large order book and improvement in the execution plus 32% growth, we have kept the debt controlled, the reason being the net current debt, mainly the retention money, receivable, other line items we kept controlled, payables almost like 25 days plus, and keeping the cash flow inflow to outflow on a project level, so we could able to bring down the net current days to 130 days, which is a great achievement. So we kept a target of 135 honestly, so we brought this down to 130, which is a great achievement. It used to be 200 days plus in FY21 and 154 days FY22. So that helped us to improve the operating cash flow and the free cash flow. So we could able to control the finance cost and we could able to retain the debt level more or less intact. Of course, it has come down to 30 to 40 crores. Mm-hmm. So the thought process is now the amount what we have got from AMTZ, Andhra Pradesh, 42 crores, plus we are going to get another 20. So it will throw 60 crores of additional surplus cash flow to the system. So that should help us to support to the working capital going forward for 12 months. So I don't see any increase in the debt. Maybe the finance cost may remain more or less flat. or maybe a small increase of 5 to 6 crores. So as an absolute number, it may be in the range of 90 to 95 crores, but as a percentage, you'll see a drastic percentage coming down. The finance cost as a percentage of revenue will come down significantly.
Okay. And one last question. This year, I think contribution of O&M to the overall revenue was upwards of 25%. Do we think we can sustain this number going ahead as well?
Madam, see, the O&M now, it's the execution range is close to 930 to 940 crores. This may go up to 1100 crores. Okay, so there will be improvement in terms of absolute number. Okay, but as a percentage of revenue, it may slightly come down because the mechanical pie will contribute this year significantly, and the civil pie will also contribute in a significant way because water railway is going up. If you see like the water business used to be 4 or 5%, this year is 8 to 9%. But you'll see FY24, it will contribute a significant way, almost like 25% plus, and railway will contribute close to 8% plus. So with the mix, okay, undergoing changes, I see O&M as a percentage, there might be a slight fall, but in terms of absolute number, it will go up, madam.
Okay. And just one last question. I think what I have understood was that our total water orders from UP were about 4,000 crores. Is that amount correct?
Yeah, it was originally it was around 20 crores. What happened, they give the project report, we have finalized it based on the actual scope of the work. That is the indicative tenders on which it has been finalized. Then a further order will be agreed to be signed based on the detailed scope of the work, and that has gone up to more than 4,000 crores now.
Okay. Now,
pardon?
How much of this is already executed?
No, I told you about 571 crores we executed.
Out of 4,000 crores, how much have we executed?
571 crores.
500, close to 600 crores, madam.
Okay, close to 600 crores, 572 crores. Okay, all right.
Yeah, you're right.
All right, thank you.
Thank you. Participants, to ask a question, please press star 1. Anyone who wishes to ask a question may press star followed by 1. We take next question from the line of Prasheel Gandhi from Nirmal Bang. Please go ahead.
Sir, just a question from my end. So for FY25, what type of order inflow are we targeting, given that we are targeting 100 billion for FY24?
FY25, we kept a target of close to 11,000 crores. The incremental amount, what we are targeting, the pie of international market slightly will go up because the team is got strengthened, and there's a huge scope to increase the quantum. We could see that some significant amount coming from the international market in FY25. Okay, that is number one. And the FGD ordering will continue to be run FY25 too. There will be following orders. Okay, the complete award will take 2.5 years. So there will be some opportunity coming in FY24, 25 too. On top of that, the material handling and the railway metro, we see huge amount of opportunity. So we have kept an incremental target of another 1,000 crores plus. So put together, this is 11,000 crores. That's the target.
And what is your execution rate for FY25?
So the range 37 to 40% plus. Okay, that is the thumb rule we can take to the opening order book. Okay, of course, this percentage may not work 25, 26 because the MDO will kickstart there. Okay, so this is excluding the MDO 5 plus the MDO maybe another 180 crores to 200 crores. And it will be ramped up slowly. In over a period of 3 to 4 years, that amount of MDO will go up to 650 to 700 crores per annum.
Okay. Thank you, sir. That was very helpful.
Thank you, sir. Ladies and gentlemen, we have reached the end of the question and answer session. I'd now like to hand the conference over to the management for closing comments. Over to you, sir.
Good, sir. We have some more developments to come. I could not share, the reason being there are some restrictions from the customer side. So maybe next month we'll come with some more developments and updates. Okay. So in terms of the order book and the target what we have kept is on track. The developments we'll update you in next month, probably before the end of our first quarter call. Let's catch up once again. Thank you all.
Thank you very much, members of the management. Ladies and gentlemen, on behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining with us. You may now disconnect your lines.